Good evening, viewers. Now I am taking into account prop prior to incorporation. Okay, this is very important. One thing here you have to know is when a company is going to form, it requires two certificates from Register of Companies: Certificate of Incorporation and Certificate of Commencement of Business. For this, they have to submit the Memorandum of Association and Articles of Association along with some documents also they have to submit to the Registrar of Companies. And the Registrar of Companies, after verifying all those things and if he is satisfied, he will give a certificate that is nothing but Certificate of Incorporation. And this Certificate of Incorporation, after getting that, okay, the private companies they will start their businesses, but in case of public companies, they have to get one more certificate that is nothing but Certificate of Commencement of Business. And the public companies, what they will do is they'll take into account the nature of business, what they want to do, and before getting the Certificate of Incorporation, the public limited companies they will decide to take same type of business. They will look after whether any business is carrying with the same type of business or not. And when they come to know that there is a business which was okay carrying on, they will go and they will purchase that. And this purchase of the business, it will be done before getting the Certificate of Incorporation. So they will start, they'll take over the business and they will start. And when they are taking over, it is nothing but sale to a company. And after sell to a company, the partnership business partners, if they want to go away, they will go away, or they will become the shareholders of the company. That is a separate issue. And the company people, what they will do is, whatever it may be the type of business they want to do, they will carry on. They'll do purchases, they'll do sales, they will do incur expenses, all these things they will do. And some profit they will get. Before getting the incorporation certificate, mind it, before getting the Certificate of Incorporation, they will carry on the business and they will do the purchases, they will do the sales, everything. And whatever it may be, the profit that they obtain, it is nothing but profit prior to incorporation. Profit prior to incorporation is nothing but a capital profit, because they didn't get the incorporation certificates. Okay, when they didn't get the incorporation certificates, that profit whatever they make, it is nothing but a capital profit. And that profit, in other words, we can call that thing as profits prior to incorporation. So this profit prior to incorporation is very important topic. Okay, after coming across the final accounts. After coming across the final account, this is very important topic. Okay, so how to get this and how to find out the profit prior to incorporation? Whatever it may be, the profit that they receive after getting the Certificate of Incorporation, we will call that thing as post incorporation profit. Post incorporation profit is nothing but a revenue profit, and we can do anything. That is, we can transfer to general reserve fund, we can able to look after the expenses, all these things they will do after the getting the Certificate of Incorporation. That we will call that as post incorporation certificate profit. But profit before incorporation is very important, and people they have to keep that in mind, that it is nothing but a capital profit. And with this capital profit, they can able to purchase the assets. Okay, they can able to do anything which was very essential before commencement of the business. All these things they will look after from this profit prior to incorporation. So here, how to get this and how to find out this profit prior to incorporation? For that, there are two methods. First one is, what are the sales, what are the expenses, what are the purchases that the company people they made before getting the incorporation. We have to prepare a trading account, I mean profit and loss account, and we have to find out. That is first method. The second method is, okay, what is the date of starting of the business and what is the date of incorporation. So whatever it may be, the time gap they will take into account. Okay, so time mean the time up to incorporate after up to getting of incorporation is pre-incorporation period, and after that we will call that thing as post-incorporation period. In this, so they will take into account the time ratio. For example, if a business started on 1st January and they got the company people, for example ABC, let us take ABC company started a business on 1st January. Okay, they acquired a business, and the date of incorporation, because don't be of that opinion that by submitting all the statements, by submitting all the certificates, by submitting this memorandum of article, memorandum of association, articles of association, don't be of that opinion that the registrar will give immediately. It will take some time. So what is the date of incorporation they will take? So ABC company people, they have started the business on 1st January of specified year, and they got this certificate of incorporation on, say for example, 1st May. So we have to take what is the starting date of the business, what is the date of incorporation. So the time gap between these two things, we will call that thing as the prior time or pre-time. So here in this case, January 1st they started. So January, February, March, April, 4 months. Okay, this 4 months we'll call that thing as pre-incorporation period, and post-incorporation period is remaining 8 months. So they'll take into account this time ratio. 4:8 is equal to 1:2, the time ratio. So whatever it may be, the expenses, whatever it may be, the things that we will come across, they will be distributed in time ratio, sum of the item. Next thing is sales ratio. What is this sales ratio? What is the pre-incorporation sales and what is the post-incorporation sales? So taking into account the ratio between pre-incorporation sales and post-incorporation sales, we will call that thing as sales ratio. So suppose if the total sales of the company, ABC company, is 27 lakhs, total sales, out of that 3 lakhs, up to the extent of 3 lakhs rupees, it is pre-incorporation sales. So we have to take the ratio. So 3:27. Okay, 3:27. We can take, okay, so 3:27 is equal to 1:9 or 1:2. Okay, so like that. Okay, like that. So 1:9. So pre-incorporation sales is 1/10 and post-incorporation sales is 9/10. Like that, whatever it may be, the expenses that we come across. Some expenses we have to divide in the form of time on the basis of time ratio, and some expenses we have to distribute or we have to divide on the basis of sales ratio. For example, rent. Rent amount is 6,000 rupees. So rent amount, whatever it may be, it will be divided in the form of time ratio. It will be divided on the basis of time ratio. 6000 into 1 by 2, 1 by 2, that is 1 by 3, 1 is to 2, so 1 by 3, so 2000 rupees. 2000 rupees will go to pre-incorporation, and remaining 4000 will go to post-incorporation. Like that, on the basis of time ratio, we have to divide some expenses. Similarly, advertisement, say for example advertisement is 10,000, so we have to take into account the sales ratio 1 is to 9, so 1 by 10th, so 10,000 into 1 by 10 is equal to 1000 rupees. So 1000 rupees belongs to pre-incorporation period and 9000 belongs to post-incorporation period. So advertisement, it should be divided on the basis of sales ratio. Similarly, purchases. Okay, what is the pre-incorporation purchases? What is the post-incorporation purchases? We have to take into account, and we have to take a ratio, and basing on that, we have to distribute that before, okay, prior to incorporation and posterior to incorporation. And some of the expenses we have to show directly in post incorporation. For example, audit fees. Some people, they will divide this audit fees on the basis of time ratio, but some people, what they will do is they will keep in post incorporation period. Similarly, manager's salary or director's fees, they will show that in post incorporation period only. Why? Because they will say that we are paying the director's fees at the end of the year. Similarly, auditor's fees. Auditor's fees also, after completion of all these things, only at the end of the year only we are paying. So we have to show that in post incorporation. Like that, you will come across the preparation of post incorporation expenses and pre incorporation expenses. So when we are preparing a profit and loss account, we have to prepare particulars, pre-incorporation, post-incorporation, both on debit side as well as on credit side. Now, the doubt is how the gross profit amount is to be distributed. One thing you have to keep in mind is gross profit is always, okay, dependent on sales. So in the form of sales ratio or on the basis of sales ratio, you have to divide the gross profit between pre-incorporation and post-incorporation. That is compulsory. That is compulsory. Everyone, they have to know this. Okay, gross profit amount, whatever it may be, it should be distributed or it must be divided on the basis of sales ratio only. Wherever it may be, whomever it may be, whatever it may be, this is compulsory. Okay, don't go for any other thought. Gross profit, whatever it may be, it must be distributed on the basis of sales ratio only. Okay, remaining incomes, whatever it may be, remaining expenses, whatever it may be, basing upon time ratio or on sales ratio, they must be distributed, and some expenses, they must be shown directly in post incorporation. For example, interest on debentures, okay, auditor's fees, managing director's remuneration, okay, all these things, they must be shown directly on, in the post incorporation column only. And after adding and after balancing, whatever it may be, the profit that we come across, whether you may come across profit amount or loss amount, it's a secondary show, but that profit amount, it must be transferred to capital reserve. It must be transferred to capital reserve. Or suppose if you come across loss, it must be transferred to goodwill account. because goodwill is an intangible asset. So you have to transfer the loss, whatever it may be, to goodwill account. When you come across profit, it must be transferred to capital reserve. Now coming to post incorporation, whatever it may be, the profit that you come across, it must be transferred to reserves and surpluses. Mind it, reserves and surpluses. Sir, suppose if we come across loss, what should we do? That loss, whatever you come across, you have to show that on the asset side under the head profit and loss account. Because losses always will appear on the asset side, whereas profits will appear always on the liability side under the head reserves and surpluses. Now, is there any profit that is there existing or opening? So we have to take that and we have to add that the current year profit. So like that, you will come across the distribution of profit prior to incorporation and posterior to incorporation. This must be done. And this thing I am telling, okay, as far as theory is concerned. And those people who want in a practical manner, that is problematic manner, you have to consult the number, that is, I am giving my cell phone number 9849238902. This is my cell number, and you may send messages or you may do phones and get clarification. And another thing is, I am going to conduct online classes within a short span of period. And those people having doubts in any subject, in any commerce subject, and don't hesitate, sir, whether it is good or bad, that thing, don't hesitate. Openly ask me, I'm telling you, openly ask me any subject regarding commerce and accounts. I am ready to clarify your doubts and I will try my level best to clarify your doubts. Okay, this thing I am going to tell you. Please avail this opportunity. Please avail this opportunity. Okay, I know that there are so many people who are taking these commerce classes, online class, this YouTube channel. Okay, but from my side, as a person of this commerce and accountancy subject, I am doing a small trial. So please cooperate, and if it is interested and if you like, okay, please subscribe to my channel. Okay, I'm again and again telling that please subscribe my channel, and here afterwards I'll help you in any aspect regarding this commerce and accountancy. So please keep that in your mind. Okay, please subscribe to my channel, and whatever it may be the doubts that you are having, you please send messages or please ring up to my cell phone number. My number, again I am telling you, 9849238902. This is my cell number. Please subscribe to my channel, and I want that, I request you and humbly begging you to subscribe for my channel. Thank you very much.